All attendees are in listen-only mode.
Good afternoon, everyone. Thank you for joining us for another webinar. I'm Mike Sadek. I'm the Managing Director of Retail Trading at Lightspeed, and I'm really thrilled to have Evan Lazarus, Chief Knowledge Officer from T3Live.com with us today. So Evan's going to discuss peak performance evaluation and why it's important for traders. T3 Live is one of our educational partners. We've been working with these guys for several years now, and it's really been a great partnership because the type of training that they provide is geared exactly toward the type of people we at Lightspeed have as clients, and that's people who trade for a living or people who trade to supplement their incomes. The guys at T3, they really run the full gamut of trader education. It's everything from long-term on-site training classes, blogs, videos, online courses, you name it. And if you're a trader who's trading from home by themselves, and you wish that you could be on a trading floor with other traders, then you really owe it to yourself to check out T3's virtual trading floor. I mean, this is the closest that you can get to sitting right next to some of the best traders in the business. You're going to get access to guys like Mark Sperling and Scott Redlers. These are traders who have been extremely successful in all types of markets and who I've personally worked with since the late 90s. So just some quick disclosures before we start the presentation. Please keep in mind this webinar is for informational purposes only, so nothing we present here today should be construed as investment advice or a recommendation by either Lightspeed or T3 Live or Evan or myself to buy, sell, or hold any specific securities. Like all our webinars, this presentation will be recorded and uploaded to our website. So if there's anything you miss or you just need to cut out early, you can always come back later to view it. Just go to lightspeed.com/webinar. And then we also encourage you to ask questions as we go through the presentation so we can keep this very interactive. So if there's anything you want to ask, please just type it into this chat or question box on your webinar console. And then we're going to try to answer as many of these questions as we go along. And we can also do a quick Q&A at the end of the presentation. So I'll turn everything over to Evan. Evan?
Thanks, Mike. I appreciate it. I want to thank everybody taking the time to tune in and listen. And I hope that over the next 30 to 45 minutes we can cover some topics that I think will hit home for many of you that are obviously pursuing careers as active traders or short-term traders or do this on a regular basis. I do want to thank Mike and everybody at Lightspeed. I've had a long-standing relationship with them. For many, many years I've traded on lots of different platforms in my tenure as a trader, and I currently have also a broker-dealer with about 400 traders in it that are all trading on Lightspeed. If that's any indication of how good a platform Lightspeed provides, and obviously at any turn I would love to, I think it's wise for any trader seeking to be in the active space to be on Lightspeed, as it really is a premier product. That being said, I want to talk a little bit about peak performance today, and peak performance is really about your mind. Peak performance is not necessarily about knowing when to buy or when to sell. Most traders that come into T3 Live, they really are interested in technical analysis. That's the primary focus of what everybody wants. And I think that's the initial step into becoming a quality trader, understanding why price moves, understanding what is support, what is resistance, how to navigate the ebbs and flows of what, as we all know, a very, very active marketplace day in and day out. But above and beyond that, I think what's most important, I think it's actually 80% of what makes somebody successful, is not necessarily about the X's and O's of the playbook. I think you have to know the playbook, but once you learn the playbook, I think it's really about 80% of how you think. And it's my experience, and I've taught, at this point, thousands of traders throughout the years. Really, the theme that most comes to my, I guess the recurring theme for most traders that are struggling or want to know how to do better is they don't really think about how they think. And I just want to hold off on that topic. I just kind of want to put that in the back of your head. Think about how you think, because it is a really, really important theme of what I want to talk about today. So let's get in here to the slideshow, and I'm going to basically go through the disclosures. You can see T3 Live is not a broker-dealer. You guys can read that on your own, but I do have to go through it, the disclaimers. And I want to start here about knowing how to take a loss. Now, each slide that I present you is going to have a theme. And I'm going to try and, just touch on that theme. I'm not going to read the slide word for word, as I'll let you do that from the comforts of your home, watching the computer. But knowing how to take a loss is an integral part of the business. And I think that it's one of these concepts that most people don't spend enough time embracing. The first thing that I teach traders, or one of the first things that I teach traders, is you have to be okay taking a loss. If you're not okay with being wrong, this is not a business for you to be in. Part of being successful is being wrong. And I think that in a business that's primarily dominated by male pride, I call it. There's a lot of guys that are trying to trade. It's a very male-dominated industry, although over the years I've seen a lot more women attempt to step in. I think a lot of not taking a loss when you should take a loss is a big problem for a lot of traders. And being in the business of trading is about being in the business of risk. And before you do anything, you have to understand that before you make a trade, whether you buy a security, you short a security, whatever it is you do, you are accepting the fact that you are taking risk. By entering the markets, you are taking risk. There is no such thing as a zero-risk situation. And if there is, I think that I'd probably be living somewhere on a private island somewhere else. There is no such thing as a risk-free situation. So by accepting that, first and foremost, it's going to be one of the most important steps you can take. Whenever I get into a trade, before I get into that trade, I know exactly what it is I'm willing to lose on any given situation. So I've accepted the fact that, I am taking risk, and there is the possibility that I am going to be wrong in my analysis, and the trade won't turn out as I had anticipated or I had planned. I'm okay with that. You have to be okay with that. If you're not okay with that, every week, every trade, every month, every year is going to be a battle. And it is going to be an emotional roller coaster that you are going to consistently ride. You have to be okay with being wrong. That's what knowing how to take a loss is really all about. I think, and we'll get into it later in the presentation, the next part of that battle is, understanding when you should be taking a profit as well. And this goes back to the whole fear and greed, cycle that most people live in. So taking losses can be very, very, very difficult. But like I said here, it is the most essential, and it is necessary for every trader to accept the fact that they are taking risk, and there is the possibility that you are going to be wrong, and you need to take a loss. So taking losses is, like I said, just a basic element for every trader's success. The fear of making money. Now, this is a topic that we don't spend much time talking about. I've read a lot of literature, and I'll just back up for a second. I am not a trading psychologist. I'm not a doctor. I am a trader. What I do every day, for those of you on this webinar that may be familiar with me through T3 Live, this is all stuff that that we and my partners have built because it's all things that we realize were really a part of the business. I've read a lot of literature about trading psychology. I've read some of the bigger, the bigger books out there, Trading in the Zone, The Disciplined Trader, and it's all great. But from my experiences, these are the most common things that I see with traders today. There is a genuine fear of making money. We talk about fear. Most people think of fear like, well, I'm afraid to lose. There's always that, oh, I'm afraid to lose. I don't want to lose. I don't want to lose money. I'm afraid to lose money. Well, like I said just a few moments ago, you have to accept the fact that losing is a part of this business, and by taking a trade, you are accepting risk. Let's talk about the other side of that, the fear of making money, because I find this to be the most common trait amongst non-successful traders. Because when they're actually in a good trade, and the trade sets up, and they execute, and they buy or sell the security, and the trade starts to work in their favor, and they see their P&L start to go green, and the trade starts to work, and it starts to work, they shrivel up, and they don't know what to do. Because once they see green P&L, that's the only thing that matters. So in essence, what you're doing is you're not maximizing any one situation. If I put 100 traders in a room, I would bet 90 of them would say to me, I take profits too early. I don't maximize any one situation. And I'd say, why? Well, because once it goes green and I start to see, my P&L go up, I just want to book that money. So in essence, what you're doing is you're afraid to make. traders, when they find themselves in good situations, they curl up in little balls, and some of them just don't know what to do with themselves. And I bet there's a lot of you out there that are listening right now that say, wow, he's really right. That happens all the time. I'm in a good trade, and I wind up taking the trade off too early. I sell for a small profit, and I come back to it 2 hours later, 2 days later, what have you, and it's exponentially higher. And I'd say, why did I get out of it? Because what happens is you're making subjective decisions. You're making impulsive, subjective decisions. Most traders can do some things really well. And that one thing they do really well is they can tell me why they want to get into a trade. And I get emails every day about this. Hey Laz, I got into a trade, and here's why. It did this, it had support here, and they outlay a perfect criteria. So they understand why they're putting a trade on. And they'll say, well, and I know, I'm risking $1, or I'm risking 50 cents, or they'll outlay the risk situation. And then when the trade starts to work, the target side of it, which is the third part of the equation, where should that trade go and why, they don't really give that as much credence as they should. And once that P&L starts to go green, they become afraid, and they take profits really, really early. And I find that it's really from a lack of confidence in your ability to analyze that happens. If you are taking profits too early in your trades, and you're just seeing money, you're not booking the money that you should be, booking, there's probably an inherent flaw in your ability to analyze. You're making subjective, impulsive decisions. Being prepared leads to conviction. So preparation is probably one of the most understated points of trading. And me personally, and again, I'll talk about myself personally because I do trade every day, I spend lots of time preparing. And I don't spend, hours upon hours putting together a plan for my trading, but I do things at this point so that my plan is compact. I understand it. It's simple in terms of how much I want to do. I work under the premonition of simplicity. When I go home and I look at my charts at night and I come in pre-market and I'm looking at what the market's doing and I'm game planning and I'm putting together a strategic plan of what I want to do and why, I really am looking for just a handful of scenarios. I try not to take on too much information. Trying to trade everything is impossible. You do one thing. I think one of the core components I learned as a student in business school was, you do one thing and do it well. Most successful companies, most successful enterprises really have a core competency. You do one or two things and you do those things very, very, very well. My question to you is, do you know what you do well? And if so, do you know how to prepare to do those things? Because my preparation and my ability to analyze and create a plan leads to that conviction. So that when that setup actually does take place and that trade actually does start to happen, I have the conviction now to execute. I'm not afraid. Everything's been prepared ahead of time. So preparation is a huge part of what we do. Most of the time that successful traders spend trading, and I'll repeat this, most of the time successful traders spend trading is not trading. I know very, very few successful traders that can sit there and just trade all day, every day, all day, every day. The one common ground between a lot of the successful people that I know that navigate the active trading space is when a trade sets up and they plan for it, they're gonna put their risk on, they're gonna make their trade, and they're gonna walk away, hopefully with a successful position on their hands. So it's really about patience and a plan. That patience and that plan will lead to that conviction. Trading with a bias. Being stubborn. And I'm going to talk about this, from my own personal history. Like I said, I've been trading since the late 90s. And I've been fortunate enough to have a successful career as both a trader and someone in the trading education business as well as a broker-dealer, and I've really run the gamut in this world of different ways to be in this business. But I've always made most of my living as a trader, and I went through a period of my career where I felt like the only thing that mattered was me being right. I had to be right. I had to be right, and I spent a lot of time on the wrong side of the market because it was really more of an ego-driven trade where I had to be right and a male pride, and it didn't matter what the market was doing or what the charts were telling me. I was on the wrong side, but my side was the right side. And I could tell you 10 reasons why I would be right, but the reality of it was I almost traded myself out of business. And it took I'd say a 6-month hiatus before my rational mindset came back to me. And this is really where this slide comes from. And we're human. We're programmed to be biased. We're programmed to feel and think a certain way. Anybody that tells you otherwise is wrong. I'm just clear out going to say it. And I've read a lot of books on trading. Some of the books have said you can't be emotional and you can't be this way and you can't be that way and you have to be a robot to be successful. That's actually incorrect. We're all human beings. We all have emotions. We all feel happiness and sadness, and we laugh and we cry and so on and so forth. So it's really impossible to trade without a bias. Every trade you have a bias. When I go in every day, I have a bias as to what I think should happen and why. But at the end of the day, I have to be flexible enough to change that bias if I need to change that bias. Being stubborn will destroy any trader's business. Being stubborn will destroy any trader's business. It's not an easy thing to do, but it's something you constantly have to think about. I personally always have to remind myself, am I being flexible? Am I being flexible? Am I on the right side of this trade? Why? Am I trading with my moving averages? Am I trading against my moving averages? What's my setup? Why? I'm constantly asking the question, why, because what I'm really doing is I'm reinforcing what I should be doing. So, with this slide, I do want to stress the fact that being stubborn can be very, very detrimental to any trader's career. You're going to have your pockets where you're wrong. You're going to have your pockets where you're wrong and you're stubborn, and what should have been a small loss is a bigger loss. It's going to happen. It happens to every trader. You just have to be aware of those moments so that you can control them. It's not possible for me to say, or for me to tell any trader, you're always going to be right, or every trade you take when you're wrong is always going to be a small loss. It's going to happen. It happens to me. It happens to the best of them. You just have to be aware of when it's happening so as it doesn't happen too much to do any real financial damage to what it is you're trying to accomplish as a trader. So how to spot and fix that problem, being stubborn. Did I make a sound decision or a foolish one based on my stubbornness? And again, the most specific way stubbornness manifests itself, and it's different for everybody, but you can read through the slide here. Refusing to set and allow targets and stop losses, were you impulsing in and out of a trade, meaning were your entries and exits purely a function of how you felt at the moment? Was your trade planned? Did you execute a plan? If you were wrong in your plan, did you adhere to your stop? If you were going to lose 50 cents on the trade and you lost 50 cents, did you lose 50 cents or did you lose $2 because you let it go another $1.50? These are the things that you need to think about. The goal of today's webinar is not necessarily for me to just talk about myself or the slides. It's to get you to think. I want everybody that's listening just to think about their own trading. Think about what you do day in and day out, week in and week out, and how you make your living. Are you making a living? Are you where you want to be? Is the problem with your trading, if there are problems, a function of your lack of technical know-how? Is your trading success or failure based on your mindset? How you feel? Is your trading based on impulse or is it planned? These are the things, if I was at home and I was listening to this, I'd be writing these notes down. And I really do some self-introspection because that's what peak performance is about. It's about understanding the way your brain works. So you need to think about how you think. So these slides, as good as they might be, everybody may interpret them a different way because, there's different ways to skin a cat in this business. Not all traders are created equal. So I want everybody just to take a little bit of time when this is over and think about and digest some of the things that we're talking about, how they apply to you. Do they apply to you? Do I fall into any of these categories? And that's really how you're going to start to possibly, fix any issue that you may have as a trader, or, help you navigate through the forest so you can see the light on the other side and get to that place that we're all trying to get to as active traders. Knowing yourself. Knowing yourself is my favorite part of this whole conversation. And I think it's really one of the most important parts of peak performance. And I'm going to tell you a little story. While I tell you, you can read through the bullet points. I had a trader who worked for me, and he was a great trader. He was super consistent. He was everything I wanted in a trader. He was consistent. He was diligent. He had a great work ethic. He was low risk. And I thought, as his boss or superior, that it was my job to push him to make more money, push him to put on more risk, just push him and push him. And I tried, and I tried, and I said, you got to trade more share size, and you got to put on more risk, and you just got to do everything bigger. And he tried, and he tried really hard. And one day he called me up and he said, look, you got to leave me alone, because what you're doing is causing more psychological damage to me. I know who I am, he said. I know what I'm good at. I know my boundaries, and I stay within my boundaries. And it really kind of shocked me, because I really didn't understand, because I thought that everybody that traded at that time in my life just wanted to make as much money as they could. And the reality of it is, I think as humans, we're all predisposed to having some sort of risk bias towards risk. Some people can take on more risk. Some people can't. It's not just about the equity in your account. Yes, obviously, if you're trading larger sums of capital, maybe taking risk is a little bit easier. I understand that. But you have to know yourself. And knowing yourself is a key component to any successful trader. There's always going to be somebody else who makes more money than you. There's always going to be someone else who does something better than you. You have to work within your boundaries. Know who you are, know what you want to achieve, and know how you're going to get there. That's a key ingredient for this business, for any business. We compare trading to sports a lot. And I would never tell, a jump shooter who knows they're a good jump shooter to play down low and start to try and, play with the big boys down low. If you're a jump shooter, be a jump shooter. That's the way this business has to be approached. You have to know what you're good at. That's part of this, secret sauce. I have some traders that work for me that are great scalping short-term traders. I have other traders that are a little bit more inclined to see things a little bit more macro. And everybody has to work to what they're good at. The trader that tries to do everything, and I know you're out there and I know you're listening, one day you're day trading, the next day you're swing trading, the next day you're investing and position trading, and you're putting on a portfolio, and then 2 weeks later you're day trading again, you're probably lost. And you're probably going to get nowhere, and get nowhere very, very slowly. Do one thing and do it well. Have an identity. Live by your identity. Don't be a perfectionist. I used to do this. Maybe it was a little bit of my ADD, but I always tried to get the best price. I tried to buy the low. I tried to sell the high. I wanted to be the first one there and the last one out of a trade. And the reality of it is that cost me more money than I could even put a handle on. You don't have to be a perfectionist in this business. This is a business of probabilities, okay? You want to be in at the right time and out at the right time. You want to be in the right areas and out in the right areas. It's not about the best possible price. And I see this a lot with active traders, is that they go through things with a fine-tooth comb. And the guys that are, the guys and girls that are sitting there trading and they're reading their charts and they're looking at every little, every little tick of every little move, and they're comparing, the prior low to the current low, and they're just trying to be ultra, ultra perfectionists. You need to have clarity of thought when you trade. Trading is not about exacts. Trading is about areas. We don't deal in exacts. We deal in high probability situations. And a lot of this you can point back to the technical analysis part, where you have to be trained, to know what to see and when the probability and the balance of power shifts to your favor. But the point I'm trying to make here is that trying to always get the best price will cost you more money than just trying to be in at the right area and out in the right area. All right, let's keep moving along here. Performance and goals. I'm a big goal setter. Those who have trained with me, those who are part of T3 Live, know that setting goals is a huge part of what I teach, that I believe in. I think it's the only thing we can do as humans to make ourselves accountable for what we say we want to do. It amazes me that most traders enter the short-term trading arena and they don't spend the time to put business plans together. And they don't have realistic and attainable goals. And I'm speaking primarily to the more novice traders that are, I'd say under 3 years in this business. Establish achievable goals. You're going to feel so good when you achieve that goal that you're going to want to do it again. And chances are, if you start achieving goals, there's going to be profitability on the other side. And it amazes me how so few traders don't do this. It's such an easy thing to do. Now, I'm not talking about, saying, oh, I'm going to make $100,000 tomorrow, or I'm going to make $1 million this year, or something that's not maybe attainable for where you're at. Make your goals realistic. Some of the goals that I used to set for myself was, when I was a younger trader, was my education. I wanted to be the most educated trader. Didn't mean I needed to know everything, but I wanted to know that I understood why things were happening. I felt like if stocks were moving up and, or stocks were moving down, or markets were going up and markets were going down, and I didn't understand why, technically, that was happening, then how could I ever make money? Because price movement always seemed so random to me. Everything was subjective. Everything was, well, maybe it'll go up, but maybe it'll go down. I had really no bias or rationale for what I did. And I didn't really make any money. I spent a long time hovering around zero because I didn't really understand the movement of price and why things did what they did. So part of my goal setting was, in 6 months, I wanted to be a much more educated trader. I wanted to be able to explain to somebody else why this was happening. Because I felt like if I could do that, then I'd be able to profit, because I understood why, and that why would lead to confidence. So part of the navigating the course towards success in this business is goal setting, establishing realistic, attainable goals, evaluating your performance, understanding the battle that you face as an individual with the emotional roller coaster that sometimes this business can put people on. Being okay with being, like we talked about earlier, with being wrong. Making mistakes and learning from those mistakes so you don't make those mistakes again. Make new mistakes. And these are the things that you need to worry about and work on. Nowhere in this goal setting do I ever talk about, my goal is to make $10,000 tomorrow. My goal is to make $100,000 next week. That's not a goal. That's not attainable, and it's not realistic. Sure, it'd be nice, but make sure your goals are not just P&L oriented. Slumps. Every trader has them. Everybody goes through this. It's very important that you understand when you're in a slump. Like I said, I was in a slump for a very long time in my career. And part of that slump was because I just wasn't as educated about what I was doing as I thought I was. And it took me 6 months, 4 to 6 months of just not being in the market to get out of that slump. Now, I'm not saying that that's what every trader has to do. That's what I had to do. You have to figure that out for yourself. If you are in a slump, it's recognizing that you're not seeing things clearly. Get up, go outside, take a walk, go to the gym, do whatever it is you do that you can remove your mind from the stock market. Cut your size, reduce your limits. Be patient. Patient in your setups. Only take trades that you've planned, you're confident with. We call them the A+ setups. Be selective. Short-term goals, which is something I just mentioned in the previous slide. Set short-term goals for yourself. This week, I want to be positive 4 out of 5 days. I don't care if it's $1, but at the end of the day, my P&L, I'd like to be positive. My goal is to have 4 out of 5 positive days. Just be green. Somebody said that to me once very early in my career. It doesn't matter what you do, just be green. And I never forgot that. It really does make a difference, because the more you do that, the more you're going to build back your confidence. And lastly, be realistic and be honest with yourself. Every trader needs to be honest with themselves. If you find yourself losing money, take it easy. Like I said, get up, revisit this slide, do some of the things that you need to do to get yourself back on track. The greed and the fear. And, you know, with this slide, I think what I want everybody to think about is just how these emotions can wreak havoc on you.
Hey, Evan, just before you jump into this slide, I just want to remind everyone that if you guys have any questions, please feel free to start typing them in so we can address them as we go along.
Yep. Yeah, please, please, we'll do a Q&A when this is over, so don't be shy with your questions. There's no such thing as a stupid question. So you can read through the slide here, but understand that in any market cycle, there's going to be greed and fear. And as a trader, an active trader, you have to respect the fact that when fear is on the tape, it produces a certain type of trade. When there's a greed type of trade, it produces a certain type of trade. As an individual, we battle greed and fear. When we're in a good trade, we want to make more. If we made, $100 today, you want to make $200 tomorrow. You make $200 today, you want to make $400, and so on and so forth. That can wreak havoc on a trader. You don't trade to make money, you trade to make good trades. Money is a byproduct of what we do. So when you sit down to trade in the morning or whenever you conduct your business, don't trade with the idea of greed. Don't trade like trading is an ATM machine. It is not. It needs to be respected in that way. So we'll move on here. Again, just a little bit more about trading fear and greed. You guys can just take a few minutes. And we just really put some bullet points here for you to go through. And again, most of these slides are open for interpretation. You have to think about how they apply to you. Some of them may apply to you, some of them may not. And that's part of what psychology is here. It's not like this universal blanket that we can just say we can throw everybody into the same category. The mindset and the positive mindset. I get up every day and I am ecstatic to go to work. And I'm very fortunate that I can say that. I know a lot of people that cannot say that. They will never say that. And I try and take that attitude with me every day. Now, I have my bad days, I have my bad weeks. I'm not going to say that I'm perfect. I'm not. I'm far from it. But I try and go in every day with a positive mindset. I try and clear my mind. I try and think rationally. And part of that is really a skill that I've worked on over the years, and I try and get traders to think about, because coming in with a positive, rational mindset will put you in such an advantage before the market even opens, before you even make a trade, because you're going to think about doing things rationally. You're going to think about building your business. You're going to think about, trying to wait for a good situation. You're going to try and just put all your ducks in order versus coming in frustrated, angry, pissed off, just not in a mindset that's going to lead to the rational thought process. Being a successful trader is about thinking rationally. It's about understanding how you think. And in order to achieve any level of success, you have to think rationally, because you're never going to make rational decisions without a clear mind. So you can, again, read through the slide. As I don't want to spend the time just reading to everybody. I really just want to kind of let you read through it and take what you will from it. Control your emotions. And I said this earlier in about one of the books I've read. I'm not sure which one, but it said, traders are like robots. They have to be programmed to not have emotions. And it never really sat well with me because I didn't understand it. Well, if I wasn't emotional, how could I be alive? So to this day, I still have trouble with that commentary about emotions. Controlling your emotions isn't don't be emotional. Controlling your emotions is don't let your emotions make your decisions. And as a trader, especially earlier in my career, I spent a lot of time with, it was like that cartoon where I had the devil on one shoulder and the little angel on the other shoulder, and the little angel was telling me the right things to do, and the little devil was saying, trade more, trade bigger, hold it longer, do this, don't follow your plan. It's that battle that we face, because trading is sometimes chaotic, and it can wreak damage on your emotional mindset. You need to control your emotions. You need to be self-aware. You need to understand when your emotions are hindering sound judgment. I had a trader 2 days ago. He got himself all spun around on a trade. He took a loss. He was hot. He was heated. He was pissed off. He was frustrated. He was in an irrational state of mind. And he turned to me. He said, "I want to get back in." And I said, "No." I said, "You can't trade again." I said, "Go take a walk. Go gather yourself. Come back. Tell me what trade you want to take and why. Set something up for me. If you can do that, then possibly I'll let you trade again." And again, I was just managing his risk. And he did. Came back an hour later. We talked through a scenario. He was in a much more calm place mentally. The scenario he pointed out worked out to his favor. He made all his money back. End of story. But he needed for someone to tell him, get up, get out, collect yourself, control your emotions. Because if I had let him trade at that moment, a bad situation would have gotten substantially worse. Don't let this business, define you. Don't let your trading define you. It should not define you. You make a lot of money today. Don't walk around like, with your head high. And if you, don't have a great trading day, don't walk around with your head low. Trading does not define you. What defines you is the way you execute, the way you plan, the way you navigate the markets, the way you control your emotions. That's what defines you. And finally, I just want to invite everybody to a t3live.com/edu complimentary 30-day online home study course. Basically our active trader program that we've broken down over 30 days. It is completely free. And I suggest everybody who's interested check it out. And again, I want to thank Mike and everybody at Lightspeed for giving me this platform to chat with you. And I'm going to open it up for some questions, if any.
Okay, thanks, Evan. Yep, we do have some questions, so let me start picking them out here. So, Evan, the first one is, on a daily basis, how do you really decide when you're going to just sit on your hands and when to get involved? And when you're involved, how do you decide what size and how big in a position you get?
Well, there are a lot of that stuff I look at technically. So, for instance, how do I determine if I'm going to trade or if I'm not going to trade? There's different ways that I look at that. If we're talking about the market in and of itself, I generally will look at my moving averages. I'll look for time frame analysis, and I'll ask myself, are my time frames aligned or not aligned? If my time frames are not aligned, chances are I'm probably not going to trade. And if I do decide to trade, it's probably going to be at a much smaller risk exposure than I usually trade. When my time frames are aligned, I generally will trade, and I'll be more aggressive, or I'll be more willing to take, a little bit more risk. As far as the risk I take, again, that's not, something I generally talk about. And again, it doesn't really matter that much. I'm primarily a day trader. I do swing trade from time to time, but I'll never risk more than 1.5% to 2% on any trade.
Okay, great. And kind of another question along those same lines is, a lot of people in the audience are saying that they find themselves getting caught up in some losses, and then when they're actually in a profitable trade, they're so happy to have a little profit that they get out right away. How do you fix that mentality that you tend to hold on longer to your losers, but as soon as you have a profit or a winning trade, you're getting out too quickly, so your profits are never really making up for your losses?
It's that fear of making money. It dominates traders. The way that I do that is, I have a plan for every trade, and every trade is 3 components: an entry, an exit, a stop. When I say exit, a stop loss, and a target. And I generally will have 2 targets: target 1 and a target 2, on where I think that stock should go and why. So all that stuff is predetermined ahead of time. So I try to be robotic in my structure. When I get into a trade, let's just make up a hypothetical situation. Let's say my risk is $1. My first target is $2.50 higher. My second target is $5 higher. Once the trade is on and I've executed and I've entered as per my plan, I generally will let that trade play out until one of 2 things happens. My targets are achieved. If the trade starts to work in my favor, I will move my stops up. Sometimes I will move my stops up at break even, depending on how far. Once I'm at target 1, my stop moves up to break even. And when I'm at target 2, I'm generally out of the trade entirely. So it is a very, very mechanical, defined plan. Most traders can do the first 2 parts. They can set up the trade, they know where they want to enter, and they know where they want to take a stop loss or what they're willing to risk. But that whole target thing becomes this subjective analysis. It's not planned. It's completely on the fly. And that's the reason a lot of traders never really maximize any one situation. It's the most common problem. It's very fixable. The way I set targets is based on some technical tools that I use, which we teach in our active trader class.
Okay, cool. And you also mentioned that when you come into your trading day, you don't tell yourself, I want to make $10,000 tomorrow or today, and I don't want to make $100,000 next week. That's not the goal you're setting for yourself. So then would you say, is it incorrect for a trader to set a monetary goal as part of their trading plan? And if so, then what is the actual goal for the day? Is it based on a percentage of winners versus losers? Is it how much you're taking out of each trade? Maybe you could just clarify that.
Okay. I definitely think it's a good question. I don't believe in monetary goals. I think, obviously, depending on your evolution as a trader, meaning have you been doing this 20 years, 30 years, are you extremely successful? Do you have lots of money in the bank? You can handle the risk. I think at that point, monetary goals are realistic. But if you are in the first 5 years, or you're in the learning stage of where you're at, I think goals have to be more realistic. It has to be, even for me, I still set goals of, I just want to be green today. I just want to be positive. Or I want to have a positive P&L week. If I'm talking about money, I generally look at it on a weekly basis, not a daily basis. For me, I know where I should be and what the kind of results I should be achieving. I do believe that every trader, especially if you are a day trader, and again I'm speaking to the day trader, somebody who's trading, pattern trading every single day, I think it's important that you set goals for yourself that, depending on, and again, every trader is at a different part of their cycle. I think it's important that your goal setting should be about consistency. Consistency, consistency, consistency. Consistency as a day trader or an active trader is going to lead to profitability. And the one thing I'll say to answer this question is, if you show me a trader that has longevity, real longevity, 10 years, 15 years, 20 years, 25 years, I'm going to show you a successful trader. Chances are. So I think consistency has to be a predominant theme, especially if you are very active in the marketplace. That's the one goal I always tell every trader: be consistent. I don't care if it's $1. I don't care if it's $20. I don't care what the number is. Be consistent, because at the end of the week, the end of the month, the end of the quarter, you are going to find that your profitability will follow.
Okay, yeah, great. That makes sense. Next question is, so you're setting your stop loss and a price target when you're getting into every trade. When do you decide to get out if it doesn't hit either? If the stock is just trending, if it's not going either up or down, are you setting a time limit for each trade? Does it vary by stock?
No, I mean listen, some trades are meant as day trades. Some trades will be meant as swing trades. It depends what time frame you're trading off of. Generally, if you're trading off of smaller time periods, 5-minute charts, 3-minute charts, 15-minute charts, most of that stuff will be intraday. And if my targets are not achieved by the close or 5 minutes to the close, I'll generally take the position off. If I'm trading off of larger time frames for longer periods, then I'll let those positions remain on as per the plan.
Okay. And Evan, you've trained obviously hundreds, if not thousands, of traders, from novices both to those who have a little bit more experience. What do you think from what you've seen? How long does it take someone that's new to this business to actually learn how to day trade?
To day trade? Well, I'll tell you this, and this is the honest answer. There's no, if I said 6 months, I don't necessarily know that that's true. If I said a year, I don't know if that's true. It's a question of commitment. How committed are you to the educational process? If you are truly committed to the educational process, I think, somewhere between 6 months and a year is a good amount of time to teach somebody how to think like a professional trader, how to give them the tools necessary to make structured and strategic decisions. There's one thing I can't teach. I can teach technical analysis, I can teach setups, I can teach entries, I can teach stops, I can teach time frame analysis. I can teach all that stuff, and I can actually I teach it pretty well. But I can't teach time. And you can't replace time spent watching the market, time spent in front of your computer, time spent watching the intraday ebbs and flows. I can't teach that. I can't teach somebody to understand how fast a market can be. That's really just literally logging hours, I call it. You have to log hours. That's like, me reading a book about, how to be a professional basketball player and then assuming I'm going to know how to be, I'm going to be a professional basketball player. It's not realistic. You got to log hours. You got to play. You got to get in there. You got to, you got to get a feel for it. And that's not something that I've ever really found like I can teach in a class. You have to commit to log hours. I can teach you how to think, and I can teach you how to strategize, but the time part is really something that plays a crucial part in that learning curve.
Okay, and for novices, do you think, should they be scanning a large universe of stocks or trading a large universe of stocks, or would you recommend picking one or two, learning the trends, the patterns, and really sticking to those as long as there's some kind of movement in them?
I think it's kind of the in-between. I don't think you should do anything in mass. Following 100 symbols or 1,000 symbols or some large quantity is only going to commit you to not have any focus. For those that know me and have gone through my training, if there's any of you that are actually in this webinar, you know that I preach and preach and preach, focus, focus, focus. Do one thing, do it well. If I personally look at 100 symbols over the course of the day, I probably would have no attention span for any one thing. So it's important that you come up with an amount of symbols that works for you. For me, at this point in my career, I probably track about 50 symbols actively. But I know those 50 symbols pretty well, and I know that they're in play. I know that there's opportunity in those symbols. Generally, I'll put new symbols in and take new symbols out every month. But my watch list is somewhere between 40 and 60 symbols. And of those 40 and 60 symbols, maybe I'm only going to trade one or two on any given day. But those one or two generally will have a very specific setup that I've been watching and waiting for. So keep your universe simple. It's not about how many. It's about simplicity. At the end of the day, our goal is to find profitability and consistency. Whether it's one trade you make a day or 50 trades a day, it doesn't matter. What matters is how you get to the finish line. So I think for novice traders, it's really about keeping it simple, creating a very functional watch list that you can navigate through and maintain a focus.
Okay, yeah, I think that's great advice. Then we got a question that's kind of specific to stops. So it seems like, and I've seen a lot of traders struggle with this. When they set their stop losses, they always seem to, in the beginning, set it at a level where they get stopped out too quickly, and then the stock turns and they miss out on making a little bit of a comeback. But then if they don't put the stop in, the blows completely through, and they end up taking huge losses. Is there a system that you use to find that ideal spot to put your stop loss in? What is that based on?
My stops are always based on some sort of technical pivot level. So I'm always using historical price data to determine what the stop should be. And then, so for instance, if I'm giving sort of a hypothetical, let's say I buy a stock at at $50 and I put and I want to use 49.50 as my stop. Generally, I'll give myself no more than 2 or 3 pennies below that level. So if 49.50 is the level, I'll set a stop at 49.47, just to prevent any sort of that penny. Or I try not to penny myself. But generally, if I'm getting stopped out, chances are it's probably for the better, and that's where I find most traders don't get it. They think, well, and I hear this all the time. The black boxes are running my stops, and the black boxes are doing this and that and the other. And the reality of it is, if you're getting stopped out of your trade, it's because A, you're just not proficient with understanding where your stops should be and why, or B, the trade just didn't work, and you have to be okay with that. So it's not an exact science, but I generally will look at a technical level that I'll predetermine, and I'll use no more than 2 or 3 pennies above or below that level as a hard stop.
Okay, and then as far as when you execute your orders in your trading style, how important is the actual execution price? I mean, when you find a stock you like, are you just jumping in at the market, or are you picking specific price points with limit orders to get into?
No, I'm very specific about my price. It depends on the animal at which you trade. Obviously, if you're trading, high beta symbols like a Google or an Apple or something that moves rather rapidly, getting a perfect price is never going to happen. You'll deal mostly in areas in those symbols, meaning if I want to get in at a certain level, I want to get in at that level. It's not an exact penny or an exact price. It's an area. So it really depends on the type of stock that I'm trading. If it's a slower moving symbol, then I generally will get in, like I said, always in an area, but never really more than 5 to 10 cents away from the price that I would like to get into. Again, it's not about being a perfectionist. I deal in areas. You get in an area, you get out in an area. It's not about an exact penny. I find this to be a major problem with day traders. They're so focused on pennies.
Okay, and Evan, where can we get a copy of the slideshow? Are you making this available to our audience? Can they go to TV Live and get a copy of this?
No, the slideshow is actually part of my active trader course, which is an educational class. It's a 2-day class that we do here at t3live.com. So it's not. I don't make it available to the public. But obviously, if you go back and watch the webinar, you can watch the slideshow again. But it is not for public. I don't pass it around.
There you go. Okay, perfect. All right, well, listen, I think we're going to wrap it up with that. Just want to thank you for a great presentation. Thanks for taking the time to answer everyone's questions. And, of course, thank you to our audience for attending and for all the questions that you submitted. And we certainly hope to see you on a future webinar. Again, this webinar is being recorded, so we're going to get it up on our website as soon as possible. You can go to lightspeed.com/webinar. to view it, and you can also view our entire webinar archive on there. So if there's anything you missed, you want to review it or just check out the slides again, that'll be a perfect way to do it. So with that, thank you again, and have a great night, everyone.